This is a video that I'm making due to public demand. So, yes, 100. Let me just use NAS 100. This is how you tell the next move of the next week. Okay, this is how you do it. Look at what the previous week done. Look at this. We closed below. We said closed below lower prices. Sindio? It means our next drawn liquidity of the week is gonna be the previous weekly low. This one. Our previous weekly low is our drawn liquidity because we closed below the previous week. Close below lower prices. Right? Close below lower prices. And then I want you to notice something. Okay? The market profile. We have been expanding, we started having a range a little bit, and then a manipulation. Below this all low. Look at this. Inside of this, fair value gap. Plus this new week opening gap. We have this new week opening gap here. We have this new week opening gap. So we have this FVG. Since it has a new week opening gap, we're going to take them together, right? The market has been bullish. We've been breaking highs. We are bullish. We're on a bullish order flow. And then you're supposed to be looking at the top. Look at this highest high and this lowest low. This is a range. This is a range. This range low and this is range high. What do you see at the bottom? At the bottom, we have taken out liquidity. Look, once we formed this fair value gap, it was filled once. After being filled once, we had another sweep. And after that turtle soup, what did we have here? A CRT formation. Candle range high, candle range low. So this one will tell you that this low is a strong low. But when you look above you, what do you see? We have equal highs. High 1, high 2, high 3. So these are your potential drawn liquidities. But before we go higher, let me just put this to the right, to the left. But before you go higher, we must come first of all to fill this rejection block. We have this rejection block here. We must fill this before going higher. So you can expect the next week to open low into the previous weekly low and then high towards this direction. That will be the direction of the next week candle. That is how you develop your bias. The bias of the whole week is gonna depend on this move. We should take out this previous weekly low into this key level for us to go higher. Okay. That is what you should be expecting. So we take out internal liquidity. To external, we are expecting external liquidity to be taken out. It has only taken me 4 minutes to tell, to try and predict the move of the following week. So NAS, you're supposed to expect higher prices. Now SP 500, SPX 500, because they are correlated to each other. Okay. Now, since they are correlated to each other, this is what you do. You are looking the same thing that you identified. You can see the way the market has been breaking. They've been breaking through. We've been bullish all the way through. Look at this. We have been bullish all the way through. Bullish all the way through. Very bullish. And right here, the market provided this fair value gap. Or let me do like this. Let me look for paper stone. SP 500, Pepperstone, US 500, yes, this one. So what can you see? For US 500, this swing high and this swing low, right? This is our range. But what are we focusing on? Look at this high. Look at this high. Look at this high. Look at this high. And below here, look at this. We have this new week opening gap and we have this fair value gap. When there are two of them, you take them as one. Treat them as one. Okay? You treat them as one. FVG. So this is a video of ours. You can see the market mitigated this FVG and we have these multiple highs resting above 1, 2, 3. So this is liquidity. This is your drawn liquidity. But look at where we are resting currently. Where we are resting currently. We are resting inside of this rejection block. Okay? Because the market had swept this low inside the fair value gap. After sweeping that low, we had another sweep here. Okay? The market tends to go for relative equal lows, smooth highs, these ones, the highs that are left open like this, these highs. Okay? And we're also bullish. We are in a bullish order flow. We are in a bullish order flow. Okay? And since previous week closed below, since you're expecting lower prices, then the market can tend to come into this low. You wait for the market to come into this low. And then we buy. So you're expecting the next week candle to open. This is what you're expecting the next week to play out like. Something like this. So the candle for the next week will be open, supposed to be open, low into the next week's low. After the next week low has been taken out, then you'll be expecting higher prices towards the drawn liquidities. Towards these highs, these ones are equal highs. There are liquidities that have not yet been taken. So the market will tend to go for them first, like that one. And then NAS tends to go opposite of DXY. So you also have to do the DXY analysis. If you have done that one for NAS, you're expecting bullish prices, then you'll be expecting DXY to be weak. But sometimes, this is sometimes. Okay? This one occurs sometimes. Right? So, looking at the DXY, this is what has happened. This is DXY. So for the next week, you can see what happened here. We closed above. So since you closed above, you're expecting what? Higher prices. But take note, you also have this major high here that has not yet been taken. But this is what we'll be focusing on. You cannot expect the market to be going like this and it leaves behind this. We leave behind this. We have this order block here that has not yet been mitigated. We still have this new week opening gap here, and we also have the fair value gap below here. You cannot expect the market to go higher before filling these liquidities. So you can expect the XY to go like this. You can expect the XY to go like this, something like this. It's just an outlook. It's just an outlook. Okay? It can decide to come here like this, or it can decide to come here like this. Yeah, you'll wait for the market to do whatever it's going to do. Okay? That's how you have your analysis. You go check over those currencies. The same thing you can do them on USD. So you can see whatever USD has done on the weekly time frame. Okay. So the EURUSD, this is what it has done. It has filled this order block here. You have an order block that has been filled here. Okay. We have taken these lows, and by looking, you can see this one. This. We have this order block here. We also have this fair value gap that has not been filled. Okay. We also have this new week opening gap that has not yet been filled here. We have that new week opening gap. So this one is telling you the market will tend to go higher than lower. Okay. Let me confirm something. Of course, these are close below lower prices. These are close below lower prices. You might expect this to occur. You might expect this to occur, but look at this week. Look at this week, the way it's long. Look at this week, the way it's long. And it has rejected these all lows, and it has rejected into this order block. That is this order block over here, like this one. So you can expect the next candle of the weekly to be bullish. Okay. So look at this model 1. Look at this. You can expect the candle to come like this, and go to this direction. We have more liquidity on the upwards on the buy side than on the sell side. So our bias for USD is bullish. Our bias for the XY is also bearish. It's inverse. Those are the things we can expect. The XY lower prices. Because man, how can we afford to buy without feeling this? How can you afford to buy above an old high? There's no way you can buy above an old high. The market must come back to feel all of this, either this or that. Those are my two POIs. The first POI is this fair value gap, and the second POI is this order block. You should wait for the market to come like this. So this week could be strong. It could be a strong high. Expecting market to go lower before going higher. So if the DXY is weaker, then I can expect the NAS 100 to be bullish. Weekly H4. You seeing whatever is happening here? On the H4, we have this turtle soup. So after that, you have this change in state of delivery. We have broken this low. Okay. And then we have rejected this high. Maybe if we are going to reject that high again, one more time before we continue the dumps. You can also see this pool of liquidity. We also have this pool of liquidity here. We also have this swing high, a single low. We can expect the market to come towards this direction before getting a turning point on this end like this, going higher. So I can expect us to go like this and then like this, because you also have a range from this swing low to this swing high, premium and discount. We have this swing low which is resting below the OTE. This swing low is resting below the OTE. So the market will tend to go like that, lower than higher. So it should go low first before going higher.